Hi, and welcome to this week's episode of the CostofCarry podcast. My name is James Chi. Let's get started. This week's podcast features a discussion about why it's important to have pre-approval when you think about buying property. When prospective home buyers start thinking about purchasing a home, one of the most important things to consider is your ability to get finance, unless you're buying all cash. But for most borrowers, the constraint of how much a bank will lend them will be a primary consideration before you start. And before you start looking at open homes, it might be worth taking a step back and closely examining your own financial situation. The quickest way to understand how much you can borrow is to talk to a mortgage broker. However, it's possible to take this one step further and get pre-approved by your lender of choice. And as you will see, there are a number of reasons why this is an important step for serious buyers. So the first reason, understanding your borrowing capacity. There is no reason to spend your weekends at open homes for properties that you can't afford. When you get pre-approved, you're going to quickly get a clear picture of exactly what your borrowing capacity is going to be, which will then shape your decision making regarding what you can buy moving forward. And generally speaking, your borrowing capacity is based on it's based on a formula that takes into account your income and expenses. And more specifically, a lender will want to see some surplus left over once the servicing for a loan, once loan servicing has been done. And that means that your income will need to be greater than your expenses. And, it's not to say that all lenders use the same measure, but each lender will have a similar way of determining how servicing is to be met. Secondly, to tidy up your financials. Many potential borrowers don't often pay close attention to their financial situation. In recent years, lending has become particularly tight, and banks have made a very strong point about scrutinizing borrower expenses. And in some cases, even potential borrowers with high incomes have found it difficult to access finance because of their ongoing expenses and debts and overall lifestyle. So when looking to get pre-approved, this is the perfect opportunity to tidy up your financials and make sure everything looks good to the lender, and that would give you the best opportunity to, if everything's clear and set out, and the broker can package it all up together and nice and neatly, then that will give you a good standing with the lender when getting your pre-approval. Number 3, present a stronger offer. So when property markets are strong, or when there is a particularly high demand style of property, the strength of your offer will be important. And that's because everyone else will have the same idea as what you're having. So having your finance already in place with a pre-approval means that your offer will be stronger than your competitors, because it means that when the vendor is receiving multiple offers around a similar price point, your subject to finance clause will not be as much of a factor if the vendor knows that you're already pre-approved. And it also means that you can act quickly. Say, for example, you're at an auction and you have 6 weeks, then your chances of missing settlement are a lot less than if you didn't have that pre-approval. So being able to act quickly, being prepared, being aware of how much you can afford. All these factors add up and contribute and help you to secure your dream home and avoid you from missing out. And this leads into number 4, which is settle quickly. So going through the process of getting finance is not always quick, and both from the perspective of getting your own financials together, as well as going to lenders and shopping around and undergoing through an assessment process, this can be a couple of weeks or months, depending on how much you need to do beforehand. So when you're pre-approved, it means that you've already done the bulk of the work already. And if you and your mortgage broker are confident, you could potentially put in an offer with a shorter settlement period. Obviously it's not something for everyone, but it's just something also to consider. And this is particularly powerful when dealing with motivated sellers who want to settle quickly. In some instances, these types of vendors might be willing to accept a lower offer in return for a faster settlement. And at least with the pre-approval, that gives them that flexibility. So it makes that offer stronger, as we mentioned in point 3. But also it means that settling quickly means that the timeline has been set. And we definitely don't want to be, buyers and vendors and real estate agents don't want to be prefer not to be in a situation where we're issuing notices to complete, because it just means that everything has to be done with haste, and some people can start getting aggressive, and because we're dealing with money and property, and because a winning bid often puts things on hold for the other buyers that missed out, other bidders or buyers that missed out, there can be a lot of disappointment and frustration, and trying to settle the first time is always the best. So point number 5, and again following on, is that it helps with sales agents. It's important to remember that a sales agent only gets paid when the property ultimately sells successfully. Now, of course, that's like a whole commission thing and varies independently. But if a property transaction falls over because the buyer is unable to secure finance, that's going to be a big blow to the agent, the vendor, and the buyer. The agent misses out their commission, the vendor misses out on selling their property, but ultimately the buyer misses out because they can, in some cases, forfeit their deposit. But for the agent, they need to start again. The buyer, if the deal falls through, they have to go and search for buyers again. And this can often be more costly and time consuming than, waiting that extra week for that one buyer that had their finance in order. And, it's a matter of the buyer being transparent in that regard, but it can be frustrating for the agent as well. So having a pre-approval in place means that the sales agent can be more confident in you as the buyer, will be more willing to work with you to strike a deal. Now, obviously, if you've got a buyer's agent with you, that can assist more in striking that balance or even getting you a better deal. Because what it means is that when people are certain things are in place, but not certain that things are going to happen, obviously, it's not certain that the buyer is going to be purchasing the property, but they're more likely to. So this makes it easier for property professionals to deal between each other and all the associated parties, because there's more, like I said, certainty. Or there's less risk of something falling through as well. And lastly, just some other things to consider as well, is that it's important for the potential borrower to understand that not all pre-approvals are created equally. And what I mean by this is that some lenders will simply run a pre-approval application through their software to get an idea as to whether the borrower will stand a chance of being approved. But that's not what you want as a borrower, as it can take away many of the advantages of having a strong pre-approval in place. So, for example, it may be the difference between an indicative offer or a conditional offer. Maybe some of them are the wordings interchangeable, but there are different types of offers that are given, obviously. And this highlights the importance of working with a mortgage broker who has that access to that network within the bank or within the lending institution to make sure that this process goes through smoothly. And that also makes sure that your pre-approval is assessed correctly, so you can be confident that you have the most money available, or perhaps you have the best conditions that suit your circumstances. So it all depends on generally what you're comfortable with. And because a pre-approval doesn't last forever, generally it's only about 3 months or 90 days. If your circumstances change, it's important to make them known to your mortgage broker or to your lender, as this may mean and will mean that you will need to go through the assessment process again. So say, for example, during the 90 days you recently took out a personal loan, or for example that you recently defaulted on your credit card, or perhaps you went and you got married, or had a child, a life event. These things can affect certain aspects of the servicing calculator, so it's important to, again, let your broker or lender know what's going on. And lastly, being pre-approved is a powerful tool, and it's often more important than searching the types of properties that you're looking for as well, because obviously we don't want you to overextend or overcommit where you can't afford to. So starting off with a budget is one of the best ways to start this property journey of yours. And that concludes this episode of the Cost of Carry podcast. Thank you all for tuning in, and I'll see you in the next episode.